Hello and welcome to Fin Business. Data has been the new oil and it is designated to transform the fortunes of the financial services sector. With the GDPR, the European government or the European Union has changed the way the data is going to be used in the European continent. The same thing is going to be echoed in different parts of the world, including India. And we are here to have some interesting conversations with Venkatesh Hariharan of IDFC Institute, who is doing a lot of interesting work in the area of data governance and data protection. Let us try to welcome Venki and ask him what is going to be the next level of growth in the space of data. Venki, welcome to Fin Business.
Thanks, Babu. So banking is going to change a lot because of access to data. If you look at human beings, we have never, created so much of data in history. I think in the last few years, we have created far more data than we have created since the beginning of humanity. So the question for the banking sector is, can they leverage this data for lending? And I think particularly in terms of financial inclusion and credit democratization, the availability of data enables us to give short-term small ticket loans at lower tenures and turn that around quickly. So what I hear from people who are doing these kind of small ticket loans, non-collateralized loans, is that there is tremendous thirst for and tremendous demand for that kind of small ticket loans. There's a company which is giving out loans of 500 rupees and 1000 rupees. And they say that in just 2 months without any advertisements, they've got about 2 lakh applicants applying for these loans. So it just shows how much of pent-up demand there is in the market. And you can unlock that demand, when you don't have collateral, the proxy that you use is data. Will this person be able to repay? And then, you build their credit history over a period of time, and then you kind of using data, you can give people a path to come into the formal banking ecosystem.
Interesting. So data is definitely bound to change the fortunes of the industry. Okay. On one side you have the fintechs, on the other side you have the banks and financial institutions which are running. Now with this concepts like GDPR coming into place, okay, it definitely means a lot of constraint to these financial institutions as to how they can use the data.
Yes.
Okay. So of course it means a whole lot more of responsibility on the part of the users of this kind of data. So how are the bankers or the ecosystem of lenders going to react in this entire ecosystem once these kind of norms are in place?
So there's something very important, from a conceptual perspective in the Personal Data Protection Bill, which is going to hopefully come into the Parliament in the monsoon session. And the bill basically says that I as the individual, am the data principal. And if I give you my data, you are my data fiduciary. So it imposes a very important responsibility. So far, organizations could say that I have taken the user's consent for XYZ and using my data in a particular way. But that does not, once the bill is in place, that will not absolve them of, the responsibility. Because once you say that the user of the data has a fiduciary responsibility towards me as the data principal, then it completely resets the equations. You can't just say, I have got your consent, therefore now I can do whatever. So there is an expectation that you as the data fiduciary will, hold my data in trust, and you will that you will use it in ways that are not harmful to me. Okay. So it's a fundamental reset of the consumer and the service provider relationship. So what we are doing is working with organizations like DLAI, the Digital Lenders Association of India, to set up a privacy working group which will analyze the impact of the bill on the industry and also put forth some constructive recommendations to the government around that.
Interesting. So now you have rightly come to the fintech ecosystem through DLAI and the partners. So when coming to the ecosystem, today the banks are the most privileged ones because they have directly the ownership of all the data.
Yes.
On the other hand, the few fintechs who are trying to struggle against these banks and trying to, or probably maybe work with those banks, they are not as privileged to have that kind of data.
Yes.
So what kind of balance can be achieved between both of them, and how can they amicably have a hands on this data, at the same time make sure that they are in line with the responsible protection of the bill or of the law related to PDP?
So before I answer that, a bit of a humorous aside, So I've been banking with a particular bank for 20 years, and so I asked them for a home loan, and I was shocked that they gave me a rate which was much higher than some other bank was offering me. And I went back to the relationship manager and said, I have a 20-year-old relationship with you. You know my data inside out. My mutual funds are with you, etc., etc. So you have every insight that you need about me, and you're offering me a worse rate than somebody else. So banks themselves are not great users, and this is a fairly well-known private sector bank. So I think the data game is going to be changing radically in the next few years, because there is the account aggregator model that is going to come in, and what that means is that the privacy bill and the Sri Krishna committee report says that individuals should have greater ownership over their data. But how do you operationalize that ownership? So if I have my data lying with a bank, it's very hard for me to share it with somebody else. If I have my data on some government systems, it's very hard for me to share it with a third party. Account aggregator model creates a system where an individual will be able to share that data with third parties in a manner which is open, which is revocable. So if I give my consent to you for a home loan or whatever, and I end up going with a different service provider, I can revoke the consent that I gave you. There is an audit trail of the consent that I have given. Using my account aggregator app, I will be able to see where all have I given consent. I would be able to look at that whole trail of consent that I have given. So that gives individuals a greater control over how they share their data. And what that means is that the game in terms of accessing data. So currently for a fintech organization, accessing data is really hard. In the next few years, these systems will enable fintechs to be able to send a request to a borrower saying that, okay, you want to borrow money from me, therefore give me permission to see your bank statement, your mutual funds, etc., etc. I will do my analysis on top of that data and come back to you with an instant loan offer. So the account aggregator model is it will be a game-changing platform that's being built by the Reserve Bank of India, and it's, I think, one of the first platforms of its kind anywhere in the world. And I think the larger message here is that in the next few years, India will probably have some of the most advanced digital platforms anywhere in the world for sharing data, for transferring money, for doing financial transactions end to end. So in that sense, I think it's a fantastic time for the fintech industry.
Interesting. So if I ask you my last question as to what is that euphoria or what is that wow factor that the fintechs are looking at today, which will take their businesses to the next level?
So if you look at consumers and what they say, and there was a session where some of the consumers were talking about the user experience of working with fintechs, and clearly some of the things that come across is the wow factor really comes in when and a borrower approaches a fintech and finds that within 24 hours or so the money is transferred to their bank accounts, the loan is approved, the documentation is not too cumbersome, etc. And I've seen that even in my own field visits when I have seen borrowers, and they've been super surprised that with bare minimum set of required documents, they are able to access loans, and they're getting that loan in their bank account in 24 hours. And then, the repayment processes, the flexibility of these loans, etc. Because the fact is that, this whole term called equated monthly installments is relevant only to the salaried class, because they get a monthly salary. But if you're a small business, if you're a trader, your income streams are lumpy. So it's not a monthly, end of the month, big paycheck that comes in a bulk. It's, streams. Sometimes it comes, sometimes it doesn't. Sometimes, it's delayed. So the flexibility in terms of making repayment, these are things that, that users really value. So that's really the wow factor that the fintechs are able to bring in. Being more nimble, being more responsive to customer needs, building great user interfaces. So these are the areas where the fintechs really shine.
Fantastic. It is really exciting to see what kind of newer and exciting and versatile kind of loans are going to come, or financial services are going to come for the financial services ecosystem or for the end customers. And we would like to look at how these kind of initiatives taken by you will definitely help the aggregators, the lenders, as well as the financial institutions to take their businesses into this exciting phase of lending. Thank you very much, Venki,
Thanks
for a wonderful conversation.